Hey traders, Jason here from Love Brothers. So I'm going to talk about the state of the market in this video, talk about the indexes, some breath readings, some individual stocks, just get a rundown of basically what I'm seeing out there. All right, let's get into it. I'm not going to make this too long because I think the indicators are pretty obvious what's going on. All right, so here's S&P 500. The thing I want to note here, and I'm going to compare this to the other indexes, is that S&P up, printed an all-time high on Thursday. NASDAQ, same thing, up, printed a new high on Thursday. But this is the Russell 2000. It had already printed a lower high, or was in the process of printing a lower high. Okay, so S&P, NASDAQ moving up. Russell 2000 was putting in a lower high, so a slight divergence forming. And then the mid-caps, same divergence, a little bit more pronounced. Okay, S&P, NASDAQ up, small caps down. So a little bit of a divergence between the indexes. They don't always have to be on the same page. In fact, I'd say, anecdotally, I'd say like half the time they aren't. But it's a little thing. It's a little warning to note that money is shifting from small caps, mid caps, which tend to be more of your speculative names, into the bigger caps or the bigger cap dominated indexes. So there's a little bit of a movement from speculation into a little bit of safety. Okay, it's notable. Next up, some individual stocks. Okay, market pressing higher. AMD, which has certainly been a leader over the last 2 months, whatever it's been, was in the process of putting in a lower high. SanDisk, same thing. Incredible gains, putting in a lower high while the market was pressing higher. Intel. It's been a while since I've called Intel a leader, but let's face it, the stock has rallied huge. Same thing, lower high while the market was pressing up. And then finally, Light, same thing, lower high. Okay, now not all stocks are like this. There have been plenty that have done well. Nebius, Rocket Lab, okay, Apple, Crowdsource, Google. There have been several stocks that also printed new highs last Thursday with the market. So it's not across the board, but just beneath the surface, some leadership stocks are starting to fall off. It's just a little bit of a warning. All right, now let's look at some breath readings. All right, so this is a chart that I talked about a few weeks ago. So I'm going to go over it again. This is the 5-day moving average of the NYSE AD line. And the point I made is, I'm going to change colors here. Point I made here is you get a surge in the AD line, and then the market has a tendency to like drift up. Okay. Then you get the negative divergence forms during that drift up, and then the market, we had a big fall here, and then essentially flat trading for about a month. Okay, go back to the end of November, we had a surge in the AD line. The market then drifted up here. In this case, it was for a couple of weeks. A divergence formed, and then what happened is like you got a quick flush, and then basically flat trading going forward. I brought this to your attention a few weeks ago because we had a surge here, not as high as the last two, but decent. Then what we've gotten is a drift up, because what happens is the surge is like a rocket getting escape velocity. It gets out of the Earth's atmosphere, and then it could just drift and float. So you get a high print, and then you get some drifting up price action, which is what happened. Now we have a divergence that is forming, a little double divergence. And so now what comes next? Okay, if this pattern repeats and this happens, I can take the chart back years and it happens all the time. You're going to get some sort of a flush, and then you could have a recovery and then just like sideways trading for a little bit while the market digests its gains. So it's just something to look forward to. The risk reward up at the highs, not as good as they were a few weeks ago. Just something to be careful. It doesn't mean the uptrend has to end, but it does mean in the very near term, risk rewards just aren't that good for new positions. Okay, if you got existing positions that you bought 4 or 5 weeks ago and you're sitting on a nice cushion and you want to just give them some room to move around, you could see that. I could justify that. But new positions, got to be a little bit more careful. Here's S&P 500 versus the 10, 20, and 50-day moving average of the AD lines. Okay, really quickly, you can see the divergences. Market is just going up, day after day, almost every day, all-time high. And yet, At first, advancers are beating decliners by a smaller amount than prior. And then at some point, decliners just start outnumbering advancers. And so this is the 10-day of the 80 line. We're down here at minus 220. Now, 10 days ago, basically was this. It's pretty much the month of May. So the market has gone up. S&P up maybe like 200 or so points, and yet more decliners are outnumbering advancers. 20-day moving average takes us back to the middle of April. S&P's up about 300 points during that time, and yet decliners outnumber advancers. And then the 50-day moving average takes us back to about somewhere over here. But right over here we get decliners and advancers are approximately equal. Okay, so as the market has pressed forward on all look-back periods, decliners are starting to outnumber advancers. So you get more and more of the gains are concentrated in less and less stocks. The market's getting thinner. Participation is not as good as it was. All right, so let's did I do that right? Yeah. All right, next up, this is going to be the 5-day high-low. S&P 500 versus the 5-day high-low. Okay, number of stocks making 5-day highs versus number of stocks making 5-day lows. So if you have 1,000 stocks printing a 5-day high, and then 500 stocks making a 5-day low, then the net of that is a positive 500. So what you have here is markets. S&P is right there, and you're getting more. The 5-day high low is over 2,000. Then the market presses forward. It's up another couple hundred points, and now the 5-day high low is only at 1,000. And then you get a press to another new high, and the 5-day high low is under 0. And so there's very obvious divergences forming. As the market is going up, you got more stocks printing 5-day high lows than 5-day highs. And the current print as of Friday's close was negative 1,600. So huge amount of stocks moving down versus moving up. Backing up a little bit, this is the 1-month high-low. Same divergence exists. Market pressing forward, higher highs, higher lows. Pretty steady price action. Number of stocks, or I should say the 1-month high-low has been diverging, and the current price is negative 847. So 1 month takes us back to about right here. That's about the middle of April. Okay, so that was like 400 points ago or so. So even on the market, the S&P has gone up that much. There's a lot of stocks that are already taking out the 1-month high low, or I should say just the 1-month low. So S&P way up at its high. Many stocks are already falling to their low from a month ago. Here is the S&P versus the 3-month high low. So the 3 months ago is about right over here somewhere. Okay, so it includes the low from the beginning of the war. All right, the current print here is minus 280. So S&P is just up, 1 day removed from its all-time high, and yet you have more stocks taking out their low wherever it was. Their low could have been over here or here or here, wherever it was. You have more stocks taking out their low from the last 3 months than printing a new high. Okay, so definitely getting thinner out there. Participation is declining. And then this is the 52-week low. So this chart goes back to the beginning of May last year. So now we're not just taking out the low from here. We're taking out the low from way back here soon after the market bottomed, after the tariffs were first announced. So print here. So we got negative divergence here. You can see that. And then the print here is minus 135. So 135 more stocks are taking out the lows from last year than printing a new high right now. So stocks are not just taking out recent lows or last year lows, they're taking out early last year lows when the tariffs first came out. So definitely some participation. I mean, these are stocks that are not just weak, recently. They're weak overall going back an entire year. All right, now we have Russell 3000 stocks above their 20-day moving average. Okay, simple divergence in place. Market moving up. Only 32.5% of stocks are above their 20-day moving average. Only that's 2/3 of stocks are below this moving average. So what happens is we got a divergence here, and what happens is the market moved sideways. Okay, there was a flush, then there was a flush, and then there was a recovery to a new high, and then a bigger flush, and then a recovery back to the high. But when you get one of these divergences, at first it doesn't matter. Okay, when a divergence forms just for a week or two near the high, it's not a big deal. But when it continues for an entire month and we drop to such a low level, I'm thinking best case scenario here could be just some sideways movement, and we get a little bit of flush. There could be a move to a new high, but we can look back here. We can look back a couple weeks from now and just see that the market has gone pretty much nowhere. All right, same thing with 50 Russell 3000 stocks above their 50-day moving average. The divergence is less pronounced, but it's still there. We had divergence there. Now this print is accelerating down. The current print is about 49%. So a little bit more than half of stocks are not even above their 50-day moving average. Okay, so with the indexes, you got the S&P and NASDAQ moving up, small caps, mid caps already starting to move down. You got the index, those large cap dominating indexes moving up. You got some stocks, AMD, Intel, a bunch of others have put in lower highs and have started to move down. It's a little subtle hint that buying pressure is drying up. And then across the board, we got divergences with all the breadth readings, whether it's advanced decline lines, stocks over certain moving averages, the high, low, and the look back periods. Like everything points towards money coming out of the market getting thinner, just participation not as good as it was. And as I said, if you got into stocks a couple weeks ago and you're sitting on a big gain and you're looking for a big gain, you're looking for I'm riding this to the end of the year because I think we have a good year coming, and you're willing to take a little bit of heat, that's fine. But for new positions where you don't have a cushion to work with, you got to have tight stops. And even if you haven't entered new positions, then be a little bit more careful. Only trade the best ones, have a tight stop. Just know that stocks probably aren't going to go running right now. So that's the state of things. Got to be much more careful. The big picture looks good. Near term definitely does not look good. We got to be more cautious. All right. I hope you got something out of this, and I'll see you next time.